Introduction. Welcome to this video on the accounting equation. In this video, we will explain what the accounting equation is, how it works, and why it is important in accounting. Body. The accounting equation is a fundamental principle in accounting that represents the relationship between a company's assets, liabilities, and equity. It is expressed as assets equals liabilities plus equity. This equation shows that a company's assets, or the resources it owns, are equal to the sum of its liabilities, or the amount it owes to others, and its equity, which is the residual interest in the assets after deducting liabilities. Assets are things that a company owns and has value, such as cash, accounts receivable, inventory, and property. Liabilities are obligations a company owes to others, such as loans, accounts payable, and taxes. Equity represents the owner's interest in the company, which is the difference between the assets and liabilities. The accounting equation must always balance. This means that the total assets must always equal the total liabilities and equity. If the equation is not balanced, it is an indication that there is an error in the financial records. The accounting equation is important in accounting because it provides a framework for understanding a company's financial position. It helps accountants and financial analysts to analyze a company's financial performance and make informed decisions. For example, if a company has high liabilities and low equity, it may indicate that it has taken on too much debt and is at risk of financial distress. Conclusion. In conclusion, the accounting equation is a fundamental principle in accounting that represents the relationship between a company's assets, liabilities, and equity. It is a basic tool used to analyze a company's financial position and make informed decisions. Remember, the accounting equation must always balance, and any discrepancy indicates an error in the financial records.